Hi, this is Cryptonomics. Welcome to my channel. Let's talk about the latest events in the crypto market, right? So, 3AC is filing for bankruptcy right now, and 3AC founder Suzu is selling his mansion in Singapore. So, if you have been following the 3AC saga and the crypto bear market news closely, you have heard about these two events recently. So today's video is about how to survive in this crypto bear market, right? So this bear market will stay. So let us discuss on what I think are some of the important key things to remember, some of the survival skills and survival mindsets, right? Because you don't want to lose more money in this bear market, and you want to survive for the long haul. You want to limit the damages, and even if you can make some money along the way, right? First of all, you have to respect the bear market, right? So you have to recognize that this is a bear market, and don't have the kind of mentality that we're going to get bullish anytime soon, right? Because I see a lot of these YouTubers and pundits are saying like, oh, let us see when the bottom is, right? And maybe we have reached a bottom, things are going to get better. I definitely don't think so, right? So because this is not just a crypto bear market. The stocks and equities are going down as well. Even bonds are not doing well. So everything is going down, right? So this is not just a forest fire. This is the entire world on fire right now, right? Because you have to understand that crypto is like 1 to 2 trillion market cap, right? And right now it's below 1 trillion. So crypto is a very small market compared to traditional assets. And with traditional assets such as stocks, if equities do not do well, crypto definitely will not do well, right? Because crypto money come from stocks, come from the excess purchasing power, right? Only institutions, when they make money in holding stocks, right? When they are Apple shares, they are the Tesla shares, they are all the Nasdaq shares, right? When they are going to the moon, right? Then they have excess purchasing power, excess cash, excess leverage to speculate in BTC, speculate in Ethereum. That's why you see a high correlation between equity and the crypto market, especially between Nasdaq and crypto market. So you have to respect that, right? Because if stocks do not do well, crypto definitely do not do well. If stock do well, crypto may do well. And this is the relationship between equity and crypto, right? So when equity and crypto are clearly going on a downtrend, you have to recognize that this is a bear market and respect the bear market. And don't try to time the bear market, because it's not going to get better anytime soon. Because the Fed is very clear about their intention. They are going to fight inflation, right? And we're having an inflation crisis that the world has not seen for the past 30 years, right? And the last time we have this kind of inflation figures are probably in the 70s, right? We were in the 70s that the US had stagflation in the 70s, right? You can go Google and Wikipedia to learn about it. Stagflation is basically having high inflation but very low economic growth rate. So the last time that we are having that kind of crisis was in the 70s. So for the past decades, the Fed is able to ease or print money without and too much downside effect, because inflation has been low. It's like if you take a drug and there's no side effect, right? You can take as much as you want. Then that was like in the past, right? Imagine if you can take like if you are, yeah, let's just take like coffee for example. If you can drink like caffeine, you can take a lot of coffee to improve your work productivity without having serious withdrawal symptom, right? You can just take as much as you want to boost your productivity, right? But right now things have changed, right? Things have changed, right? Even if you take a sip of coffee, you're going to have headache, and then it's going to have a big problem right now, right? So things have changed because inflation is becoming a serious problem. And the Fed has said very clearly they are going to fight inflation. They're going to fight inflation whatever the cost, right? Even if it means a recession. So basically, I see two scenarios here, right? The first scenario is that the Fed is successful in fighting inflation, but in doing so, asset price will be killed. Because asset prices are much more interest rate sensitive than inflation. So a lot of inflation is actually now cost push inflation. Not really demand pull inflation. Demand pull inflation is due to money printing, and that is part of the problem. But and yes, Fed can cool off the demand pull inflation to reduce the amount of money circulating in the market by increasing interest rate. But when it comes to like cost push inflation, there's nothing much they can do about it. It's coming from the supply chain issue and ongoing military conflict between Russia and Ukraine. All these things are not within the Fed's control. So the Fed can reduce interest rate only via the monetary mechanism, right? So it's quite a weak attempt to control inflation if you don't have control on what's going on outside the US market. But asset prices such as stocks, bonds, and crypto, they are extremely sensitive to interest rate. So what happens is that if the Fed is successful, they can lower down the inflation, but in doing so, they will kill the asset market. But there's also another scenario that that inflation does not really go down, as I said, because inflation is not really that interest rate sensitive, because it is dependent on a lot of factors outside the United States. And if that happens, right, that's the worst case for the Fed. And the worst case is that inflation does not go down, but asset price is killed nonetheless, right? So there's actually from there you can actually see that for asset prices, they are just going to go down. There's no escape on that. Yeah, either way, whether the Fed succeeds in fighting inflation or not, asset prices are going down. Okay, so basically in this kind of environment, right, you want to have the attitude that cash is king. Right? You don't want to make any like long-term like crypto investment. Right? Don't try to find the next coin that's going to make 10 times, 20 times, or 50 times over the next like 6 to 12 months, right? Because that's like a losing proposition, right? You don't see that in bear market, or maybe there's one coin who can do it out of like 2,000, 3,000 coins, right? You just couldn't find it. Right? And focus on your non-investment income, right? This is a time to actually to make more money like outside the investment world, right? So focus on your job, focus on your side hustle, focus on your business, whatever it is that you do to make a living, right? Okay, this part is actually more interesting for traders. Actually, it can be a good time to look for trading opportunity, right? Because in a bull market, there's not much there's not much trading opportunity besides long in BTC or ETH, right? Because with BTC or ETH, you trace, you just long, and that can help you to make money. But remember, the problem with bull market is actually volatility is not very high. So you can make money by buying the dip, but you can't really make obscene amount of money by buying the dip. For experienced trader, they know like you need volatility to make money. Right? In bear market, there's a lot of volatility. There's a lot of volatility in the bear market. So for bear market, the trading opportunity is you want to buy the dip for the decade bonds, right? Because basically, if you see like certain like blue chip coins like fell 20% or 30% or even 50%, there's a real chance that over the next 2 to 3 days they're going to rebound. Right? We saw that for BTC when it actually fell below 30K. There's some form of rebound. When it fell below 20K, there's some form of rebound. When ETH last week fell below 1K, there's some form of rebound. But you don't want to hold them for long, right? Because this is a bear market. And basically, these are like short-term trading opportunity. And And the other way, and the other kind of like trading opportunity is to short the relief rally, right? So whenever there's a relief rally or there's actually price going up in the bear market, what do you do about it? You short it, right? Of course, shorting is very risky. Do it only if you know what you're doing, right? If you short the relief rally, you can make some money. I think there's plenty of opportunity because when the entire market is going down, any form of rally is not sustainable, right? So for trading, you just need to focus on looking for the opportunity and manage your risk, right? You don't want to you don't want to bet your entire portfolio on one trade because things can always turn against you. So be careful about that. But I think this basically summarizes on how to survive in this bear market. Yeah.